Welcome back. We got 13 minutes. Good afternoon. Where are all the people that were... Hold on a second, guys. Wait a moment. Looking through chat right now. Hold on. Where did all those people go that were going, oh no, the market's red. Oh no. I see a lot of people talking about, wow, this looks good. Wow, look at the green. I'm a buyer. Wonder if I click on some of these names and look at some past messages. Oh, isn't that funny? Isn't that funny? Oh, look at these people in chat from 8:30 this morning. 9. Oh, and then I must have started to talk and Oh, and then since we shorted from yesterday, from today at open, we were shorting, and then all of a sudden it turned. Oh God. If only there was a way to see this coming. How can we possibly trade both ways? Well, it looks real green, so I guess we can be happy spirits now, right? We were sad, now we're happy. The way of the pajama trader. Your pajamas felt a little itchy earlier, didn't feel very good. Now they feel great. You're comfy in bed with your greasy fingers on your mobile screen, tapping away, Robinhood sending you alerts. Buy this, buy that. Brian says, not gonna lie, I was pretty calm at open, did better than before. Absolutely. I hope so. You guys should again, a lot of you guys that have been here for a while have certainly done a lot better. Brian used to shit himself every morning, for sure. I think I used to specifically make fun of Brian for half the shit he would say in chat. And a lot of this, also I was gonna make a point, I was gonna put on Twitter, but probably not. A lot of this comes from like the memeing idea as well. I was going to talk about this a little bit of how do you spot a phony as well, and just having no experience to begin with, is that as soon as you start to get a little stressed, a little bit of anxiety, the way that comes out is usually by using memes to explain the way you're feeling, but also to cover it, right? Because you want to let everyone know how you're feeling. But you also want to have it be in a bit of a meme form so that it doesn't feel as serious, even though you're really inside, your soul's being crushed, you're losing money. And a lot of times that's what it used to be in here. It'd be a whole lot of memes. I wouldn't even talk. Half the time I'd be gone the whole day. And then I'd just come back, put the LOL into chat. Just because, again, during then, it was just, there's no way to get around it. People were just, there's way too many emotions and an echo chamber going on. Now it's, we can make fun of it, and that's where, through that making fun of it, we keep a mellow head, right? We don't change our baseline. We're neutral. We're neutral both ways. We trade both ways. This here is a short opportunity from the open, right? We had a lot of short opportunities, but we also realized it's a buy opportunity. We're not gonna miss opportunities as they come, and especially when, again, we got 9 minutes. When you think of just travel and what we've been trading value, and value hasn't stopped going up, right? Value hasn't stopped going up. So when there's all the charts that we are trading continue to trade up, we don't care what everyone else is doing. We're witnessing them and acknowledging them and what that means in terms of the market as a whole, that it might pull some demand down. We might react a little bit, but there's a very good understanding of a difference between these things. And you look at these charts, and again, I've said it for the last 2 weeks. First of all, it's okay not to be making money, or if you're losing money. These type of things are okay as long as you're not specifically just making bad decisions that have no point. I think there's certainly learning opportunities through just trading, and I posted some ideas a little earlier in the channel. You've got to be able to just make trades to get better, right? You'll get to a point where once you have enough experience, those are dumb decisions. And specifically when I'm talking to people that have been here for like a year, and I'm usually talking to them, not those of you that are sort of newer. Those people that do have the hours and they know better, those are usually the people I'm talking to. You know whether or not I'm talking to you or not. You know whether you're a big target, right? So, sort of like the message I sent earlier, if you know you're a big target and you're really bad at handling criticism, then yeah, don't jump in the pit today, right? Because again, I'm going to be showing off charts that we just continue to trade. We didn't even do anything today. Besides transitioning on a lot of these charts and just re-entering, a lot of these are just the same thing we've been doing. So we don't even really need to discuss the strategy behind it. But it should fucking sting, right? It should sting. And here's another thing. Go look at like the profit section. I'm going to call JJR out here. JJR with the 0 profit day. Do you guys think that's good or bad? Do you think JJR is feeling, oh man, didn't get any profit today, what a shame? Or do you think that's because it's fucking 0 because the dude took profit yesterday, bought new positions today, and has a bunch of unrealized gains that are going to go through this week? A lot of you always look at your profit and loss on the day as if that's a judgment of your success when it's not. Green day, red day doesn't make a difference if it's a part of a plan. If you bought things today and you're still pushing them, then of course your profits fucking hasn't gone up. A lot of the time you guys are looking at that, you're looking at it so much, especially when you're buying and you're just conceptualizing a different idea. And I don't know if half the time that's why you miss some of these other things. And again, it should sting. It should sting when it's the same thing over and over. Even the charts that you guys want. You want to go trade MGM, and then if you don't trade it, you're just price watching. These should sting. You don't need to see the profit yet. It can be unrealized. It's when you don't take it that it makes you feel stupid, of course. You need to realize your gains at some point, which is why we talk about transitioning. But again, I do want it to sting a little, because again, a lot of you are here in, it's not that you're losing money or you're making bad trades, it's the opportunity cost for doing something else. Like being a CCIV hodler and thinking that opportunity cost is a made up idea. That you being here doesn't, and you being in here and holding it long somehow is not like being short on everything else besides this position. If you're in this position and you have all your capital here, or a significant amount of your capital, then these people are basically saying, no, this trade is actually going to make me more than any other trade that I could have made today or I will make in the future, then I'm going to hold this. If anyone thinks that, then I don't know. But you know, when you ask yourself, is this a dumb trade? I think all of us look at this and go, that's pretty dumb, right? Feels dumb. I don't mean it in like, you're an idiot, something sort of way. No, I just mean in terms of opportunity costs. Does this feel right compared to some other charts that are very straightforward? No, of course not. But this is where there's a part of you. Think of all the traders in here. A lot of intellectual and smart people in here. Guess what? They're all being driven by an idea that's removing them from what's right in front of them, right? Which are a lot of very straightforward ideas that, again, just look at the market. Look at the market average. The market's green today. It's probably we're gonna watch on the 5 minutes. Probably gonna take some profit here to close, tighten up at the very end. The market's green today. If you're down, again, the average beat you again, which means if you're actively trading, then you haven't put the amount of time in yet still. And that's okay. But you got to know your weaknesses, your strengths. Are you at the point where you know enough yet? If you're still losing when actively trading, then you don't. You don't, right? Again, that's why I said, careful if you're emotional. If you're not beating the average, then you're below average. You scored less than the rest of the people that took the SAT. You're below average. Okay? You got C's in school. You're average or below average. If that was in university, you're below average, right? If you're a below average trader, guess what that means? You're giving money to other people. You're just donating. Unless you have the confidence and the know-how to take money, you're going to be giving it. There is no such thing as just hanging out, having a good time. Yes, you need to make trades to learn, but that might mean you need to get a smaller account. You need a smaller account because if your losses are affecting you emotionally, then you have too much money in the market. You are the one making your own mistakes and hurting yourself. There's no one else that is in control of your account if you're losing money. It's only on you. no matter what anyone says, right? And so those of you, there are people here that make, let's say, more money, and they trade with small accounts because they know they're learning. If you're one of those people that also make a small amount of money, then you need to be using a small amount of money, right? It should not be substantial to you. It should not feel like every time you take a loss, it hurts you. That means you're trading with too much. So that's going to be a little bit of a lesson going in from today, because there's a lot of people that reacted so emotionally today that it's crazy. It's crazy. And it's just because there's too much money on the line. That's the reality. You just have too much money on the line, because otherwise you shouldn't really care if what's going up or down. It's just a fucking market. It's a stock market. What do you care? It doesn't affect your life. If your trade's affecting your life for the bad reason, then there's too much going on. You have too much on the line. Trades can affect you for good reasons. I talk about, you get the chance to buy 2 houses off of a trade. Great. You have a life-changing trade. Great. It shouldn't be life-changing in the fact that you just blew up your account and you get no more money. You got to go live with mom. I don't think so. Can a small trade turn into a big trade and turn you into, a completely different person? Absolutely. It shouldn't go the other way, though. It should not go the other way. So unless that's the reason why you're reacting, well, then you need to learn from why you're reacting that way. That might mean you get too much on the line. It should never be that way. And I don't like to use like the whole, well, don't trade with more than you're willing to lose. No, just be realistic. It's straightforward, right? It's straightforward. Nothing's changing at close. Again, Dawn, can I buy something here at close? Come on. Let's be honest. See, apps got mentioned. Apps getting the institutional boys coming in at close. Again, everything looking basically the same across the market. We got 30 seconds. Be interested to see exactly what happens here at tech. If any of this liquidity gets used, obviously a lot of liquidity. If this stays tight, then there it is. Let's see if we can get above this trend line. It's on the trend line. It's actually above, so that's basically all you need. If that stays above, as long as there's no more selling in here, it's above the trend line. Be very interesting. Very interesting. Holding that level. There it is. There it is. I don't see any after hours. Don't see any after hours action coming down here. Boys. Good day or bad day? If you're trying to answer that question, you haven't learned anything. It was just a day. Exactly. It was just a day. Now, I would say there was a lot to learn today. And we did learn a lot. And I think we should start with that. We certainly learned a lot today, right? We learned a lot about the consolidation we're in. We learned a lot about what people think is going on in the market. We saw volatility. We learned a lot about volatility here, which is really important, I think, because we had suspicions. We've had suspicions, and we've gotten confirmation of those suspicions a few times now. And I think today is probably one of the best confirmations we're going to get in terms of volatility due to where volatility is right now. Volatility is down on the day. Volatility is down on the day. And you think about some of these ideas and we look at the dollar, there's basically no risk being priced into the market whatsoever. The money that left treasuries, the money that's leaving the dollar, the money that we thought was possibly outflowing from equities hasn't gone anywhere. It's not going anywhere. There is no risk off. There's a consolidation going on, but there's a lot going on in terms of underlying in the derivative futures. When you look at these things, right, we think of if money's coming out of the equity market, we will see a spike in the dollar. That's just a reality, right? You sell an equity, it's now cash. We're going to see the dollar rise, right? We're going to see it rise. We're going to see volatility spike as this is correlated to the downside, and with risk that this will spike because, well, there's money leaving, so that must mean there's volatility because of that. There's a change in the flow. There's got to be some change here, so it's got to be volatile. We don't see that anywhere. And you look at the market, it's like nothing happened. It's, what I've been talking about from over here, and we started to really put it into practice, was that every time there's a price move, it's almost instantaneous price movement, right? It's not, oh, we're going to take a week to get there. It's we're going to go and then we're going to make the move immediately, right? That volatility that is not being shown in the VIX. This move here, look at the spread on this day. Look at the spread. That's volatility that's not being shown in the actual volatility index or with IVs, nothing, right? And so again, we are having price movement that is now, and I guess you could, quotation it, it's normal price movement. Yeah, I mean, it technically is normal price movement. Why? Because we've been doing it ever since over here. Ever since we had the big rotation day, November 9th, it's become normal to just have these days where we just completely rotate from different sectors, from value to tech, from tech to value, right? From yesterday, we started this whole tech rotation into travel and into energy and into banks, everything else, right? Look at the banks. Has anything changed over here? Has anything changed over here, right? You could literally just have your eyes closed and feel this with Braille, and you don't need to know what else is going on in the market. You could literally be blind in trading. So again, if you lost money, it's because you're just not looking at what the signs are, right? It's just value. And the only thing that changes is volatility, is growth, meaning tech, due to volatility. When there's volatility, money goes into tech, right? So what's going on right now? Well, a lot of money's been coming out of tech. Why? Because there's not really any real volatility, right? And so money's just going into those tickers that have value and are going to retrace. Is this move here indicative of an outflow because equities are scary? Or is it because money's coming out of tech because there is nothing to be scared about and we're risk on, meaning there is no volatility? There's only one way to look at it, because there's only one way that what we see in the market happening right now is true, which is that the dollar's not moving, volatility's not moving, and value is absolutely exploding, right? If you don't think that these, again, when we talk about energy, banks, all of value, they're tanks. Healthcare, they're tanks. They move on a marginal basis. They don't put big points on. They move very slowly. For this here to happen, with this here, banks, when you look at energy it barely moves. See the retracement idea? For all of this to happen, it requires a significant amount of demand and a flow. It requires a significant flow, which can only come from one other area in the equity market, which would be tech because of liquidity, or it would need to come from treasuries, which we've been seeing, or it would need to come from the dollar, which we've seen for a while, but we're no longer seeing this downwards move where money's coming out of the dollar and flowing into equities. This move here is showing it, right? We've seen it here, and we've talked about this. Now, we've talked about some levels of volatility in here, some questions that we couldn't just call it risk on equities through here. We wanted to be careful, and we were patient, right? We were patient not to hurt ourselves. But again, nothing has changed. And it's very hard not to look at that average and have that affect you. But that's why you guys are here, and we trade the way we do, because this here looks a lot different than our trades, and it should look a lot different than what your portfolio looks like, unless you're specifically trying to benchmark against the full average, right? Unless you're trying to trade just against the average, then this is what it would look like. Otherwise, your portfolio should be, if you're trading through this value idea, it should either be trending towards the upside, or what it should look like is something like this, where you trend up, you consolidate, you break out, consolidate, break out. Why? Because that's how we trade. We only trade if there's a breakout, or if we're shorting and there's a breakdown, right? There has not been a change in any of these tickers, even when you look at travel. This trade that you've been on for first of all, back in the beginning of the year, and then through all of February that we've made this trade. The only time that there's been a change is when we take profit on transitions, which we've really honed in before we needed to get into transition mode. So, thankfully we went over this a little bit. Transition and then buy down here. What did I say this morning? How many of you transitioned, took profit here, into new positions down here. How many of you actually did that? If you lost money or you are not in position, you did lose money because you didn't make that trade, which is the trade that we've been talking about for so long, right? Take profit, look for your new entry. Today is a godsend to you, right? Not to get all like mojo happy or anything or emotional. Ooh, down, up. Who cares? It's an opportunity though. We buy on pullbacks. When the whole market also gives you demand behind you, yes, you might miss a few points. But it's there, right? And even again, look at the 5 minute. There isn't like, it's not like that it dicked around for 20 minutes, right? And you don't know. No, it's about as clean of sort of a whip as you get. And we talk about this a lot. You don't need to take profit. You bought here, you're here. You would look like JJR's profit. I'm going to look at profit. You would be a 0 right now, sitting on unrealized gains and also sitting on potential, right? That's what today's really a potential day. It's about potential. If tomorrow you get braked even, that's okay. It removed potential, not your money, right? And that's what it's about. Let's see. Brian's got the plus 300. Obviously, we saw those numbers from earlier. He got some snap trades. Let's look at the snap trade real quick. Very similar idea. What happened over here? Let's take a look. Does this look a little different? And Brian even mentioned it over here when it started to go. Does that look a little different from the average part of this day? So how would you get into this trade? Well, you'd have to be watching it, right? Well, isn't it that the more we watch and the more we're aware of, the more opportunities we'll be able to take advantage of? Absolutely. Would you be able to get this trade if you weren't actually aware of it or looking at it? No. And so you would have missed it, which is basically like saying, I don't really give a shit. So you're not going to get all of them. You're not going to catch all of them, but the more you look at, absolutely, the more chances you'll have. And so again, that's where it comes back to who's working the most, who's trying the most, focusing the most. There's opportunities out there. Now, is it okay to just be on the sidelines because you're unsure today? Absolutely. No one's gonna obviously shit on you for that. There's definitely a time and place for everything. But again, it's a great trade. Very, very good trade. And again, especially being aware of things that are going on. Twitter, right? Now, I took the Twitter trade because this was a part of my transition idea. And you look at the Twitter trade, same thing, right? Now, the difference being here is that I'm an opening trading kind of guy. That snap trade was later. I wouldn't be looking during that time. I'm not really, I'm doing other shit at that point. Over here, of course, I'm an opening trade, so there you go. It's a straight forward opening trade. I mentioned it earlier, mentioned where the trend line's coming in. And obviously, the biggest boy in the bad boy column, Facebook. This does not make the chart bullish, by the way, for those of you that are begging for me to be wrong and everything else. No, it's still very bearish. I'm sorry. I'm sorry that the one candle here looks good, but it does justify a lot of the other moves that we see because of convergence, right? If this is able to make this move, then of course these other tickers are going to make their moves as well that are much more bullish, which is why you took those trades and not this one, right? But this doesn't take away from the fact that if something that is really this chaotic and is overall very bearish, right? And there's been multiple short opportunities from here, and it was down yesterday, and guess what? It was down from the open today. I think JJR even, I don't know if he was memeing or what, but if you took this short here, this came down very low today, which is where I sold my Apple position, right? Those puts that I had for, again, a significant amount. Yeah, it bounced back later. I just want to show the difference here. When you look at these numbers, whether you took it, it doesn't even matter where you took it. If you took it from over here, that's a big boy gain right there. Or if you took it from over here, anywhere, right, from the level, that's 2%. Guess what? On that amount of time, if you did it from even the open, that 2.5% is, you're very close to getting 100%. You're very close. On these type of tickers, and again, the Apple trade, just for those that you didn't see it as well, this here, as soon as, how do you do puts? What are you supposed to do? Well, you got to react very quickly, right? So how do you take advantage of this here? You are getting out of that position as quickly as possible as soon as there's getting bid. Why? Because this is a one-way trade. If you're shorting here, it's a one-way trade. There is no such thing as holding through this. Even if it goes down tomorrow, there is no such thing. It's too much time lost. It would need to double the move to the downside to justify holding through anything. So as soon as it goes through, guess what? Marches here are the average on any puts that you see over there. The average from here to there, anywhere in here, is 300%. That's the average across all the puts. 300%. You do the math on Dos La Casa. You see what's going on the trading floor. But again, so like Hector just said, it's very quick. It's fucking quick, guys. And this is why I talked about this morning that it's a 10-minute window or so, right? In that 10 minutes, you could have the same idea, but it's that 10 minutes that you looked for a trade, or you looked to how to enter the trade. If I say I'm entering a trade and then it takes you 5 minutes to find it, that is 5 minutes that you're never going to get back. And a lot of you felt that today, I know, when we started to get this whip and then you started to get enough confidence to go make a trade, right? Or you were shorting from the open, right? And then you had to start taking profit because you saw that it was whipping. And then as you tried to go look now for new long positions because all you did was look at shorts, now you lost time during that to go catch it when if you just did it at that point where it transitioned, you took profit on your shorts and then moved to a different ticker completely to go put long positions on, right? It's just something you have to be prepared for, right? That's all it comes down to. Today's a fucking hard day. Today's a hard day, right? It's a hard day for everybody. It's a sweaty day. There's a lot going on. There's a lot of being patient that you had to do, but pulling the trigger as quickly as possible on some other trades. You had to hold through with your big positions. It can be scary holding this position here. Like, let's say, the win position is really the biggest trade of the day still, but it's a trade from weeks ago. But it's hard to hold this. I know some of you were probably looking here at open. I bet a lot of you took profit at open because you just saw it. You were up 4-5% at open on the underlying when you opened, but the market was down. So you went, oh shit, you know what? This is probably not good, guys. And you might have gotten shaken out when you didn't even cross the low of the prior day yet. You didn't even get close to the low. But it's just that it's that emotional response where you have to look. You don't know for sure. There's not an absolute. This could just fucking tank. But you have to go probability-wise. What's the probability here? That one candle as it started is not enough to overturn this whole trend and what we know about the rotation and value in the flows, right? And also, if you're looking at options, again, I want to make sure, I say it every single day as always, the stock market is a derivative of the options market. What you see here is not what you're going to get all the time, right? It's not. Because you know what's happening behind the scenes on the entire market right now that you're not seeing on the underlying? Is the most significant amount of options buying you've ever seen in your fucking life. And I've talked about this since last year. The options volume just continues to grow. This month will be, even with less days, be the highest option volume month ever. Just like January was the highest option trading volume month ever. And just like December, even with the fucking holidays in December, was the highest trading option volume month. And it's just like November was. Get the picture? Because what's happening is just this explosion in options buying, which again causes, why do the moves get so violent? Because every single move is in reaction to the options. That idea of a gamma, right? That market makers that write these options, all they're doing is buying and selling the underlying to be delta neutral against those options, right? So if there's a fuck ton of calls being bought and price does start to increase, then they need to go buy the underlying, causing an even bigger move, just like here. But just like over here, as soon as that price doesn't continue, that idea of gamma being the acceleration, as soon as that acceleration slows down, right? This is a very fast acceleration, high acceleration, and as soon as it starts to slow down, well, market makers no longer need to be buying the underlying for the prospect of higher prices here. They start to sell, which can cause the chain reaction in the market, which again, it's not your cousin that's selling the stock that's causing it to start to go down. No, it's just the actual liquidity providers themselves, right? And then we react and we start to short. And if we start to short, what happens? Well, it continues, right? It starts to roll even further, and it gets quicker and quicker, and the acceleration picks up. What happens if the acceleration of the downside stops? Market makers stop selling. They stop selling. Uh-oh, are we about to do it again? Yeah. Do you remember that V idea we talked about over here? Yeah. I kept talking about it here, and guess what? I was wrong for like 2 days in a row that we should be getting this sort of move here. Well, we got it here, right? We got it here. We didn't get it yesterday, but yesterday we also said tech was selling, so I guess I wasn't wrong, but you know what I mean. I could have been wrong. Obviously over here we knew that this was happening here, right? We knew this was happening here. In terms of today, in terms of confirmation, did we get confirmation of the short idea through the trend line? Absolutely. This is a big move, guys. That's fucking insane amount of, again, those of you that don't know the amount of dollar value behind this, you don't even need to know, or if you know what the cap size is here. First of all, U.S. equity market's a $30 trillion market. That's what the cap is in terms of stock, the shares in the market. The options market is larger than that market. The betting that goes on is larger than the actual value in the market. That's on a daily basis, right? And so the amount of fucking options that it's just insane, right? It's an insane amount of money that's going on in here betting, right? And that's 3.5% that got lost that's 4% from high to low there. It's just an insane amount of money, right? And for this to go back and forth, it's going to be violent, right? And so, yeah, that was violent, and it's quick. It's so quick. I would go back and look at some of this intraday and see what you can do in terms of understanding. There's so much to learn. I'm going to go over some other things, but let me see what Brian's saying here. Could you address the bag holder comment you made yesterday on AMC? Does that apply to all tickers when there's a lot of open interest, or is AMC because of the big spike? Example is the Ford chain. Okay, so yeah, so what's the difference here between, let's say, like Brian says, Ford bag holders in option chains or AMC? What's the difference? Think about the two here, right? You want to think about where the option interest or the open interest of those calls came from. So the $10 mark is big on AMC, right? It's got basically the biggest open interest, the most active contracts on the 10, right? So like we talked about over here, buying the 10 is just ridiculous because it's over 50% out of the money. You don't buy anything that's over 50% of the money on options, right? That's just insane. If it's only a month out, that's insane, right? Even on something as silly as AMC. It's because of the mentality behind it. So you wouldn't look at it as in, the Ford chart could look the same as this chart here, let's say. Obviously with the percents being different. This is 300 fucking percent, right? Obviously the Ford chart would not have that, but let's say that this is a similar dynamic between the two, right? In terms of price bars, let's just say it's a similar dynamic, right? You had a big move and you consolidated the move, and now we're flattening. The difference between the people that are still in calls here and on AMC is that AMC being significantly retail and a lot of ideas, there's people that bought over here in somewhere in either this candle or this candle, so whether they held through or not, that bought this on the prospects of significant profit up here, right? What happens when you're losing money and you're just bag holding and your contracts are worth zero right now? The $10 strikes were worth zero, right? They were actually worth zero. But you bought something that was worth, let's say, I don't know what it was, $4, $3, $4, $5, whatever the hell it is, right? It had some sort of value. And then it goes to zero. As soon as there's any move, you're willing to go get out of that position. What happens when someone that bought in for a higher amount is willing to sell for less? So they're willing to buy up here, but they're going to sell down here weeks later. What happens to price? Those traders, they all think the same way because they all got in for the same reason. They will clog up that market. Yes, they'll provide liquidity, but that's supply. So somewhere on those $10 contracts, there is a supply level, just like we talk about with the trend line or horizontal resistance. On that option chart, I don't have the time to go look at it, But somewhere on that option chart, probably horizontal towards all that buying over here, just like we talk about with the support level of buying here, on that option chart where all of those contracts got bought, there's a level. And that level is also where all of those traders are going to be selling at resistance, right? Yes, they'll provide liquidity for people to buy, but you have to get through every single one of those traders first, and it's going to cause all of the other contracts will continue to, like let's say AMC just continued here, all of those contracts would continue increasing in price, right? Just Black-Scholes out of their mind. IV's going up, prices going up on the underlying, Delta's giving you exponential, but those $10 contracts, the price is not going to increase until it actually starts getting moving, because there's a whole fucking level of supply in there. So when you think of supply and demand increasing price, if there's 100 times more supply than demand still, well, you got to get through that supply. Now, of course, I'm exaggerating in terms of those contracts because they have been every single day getting removed, but it still doesn't change that you're going to make significantly more on, let's say, $6 contracts here than you would on $10, even if you held up to $10. That's just, you would still make significantly more from at the monies compared to those out of the monies, even if it reached $10, right? Because of those traders there. Are there as many down there? Absolutely none. There's higher volume? Absolutely, but not as many open contracts, right? And so what that does is that there's less supply. If there's less supply of $6 strike contracts than there is for supply of $10, then that means that demand is going to cause price to increase more than the demand on those $10, right? Just simple supply and demand, and also that it's also the bag holders because of emotional retail trading, not sophisticated trading. There's a whole bunch of ways to classify them. It doesn't really change it. It's just the simple numbers in there, right? Large sell orders rent the price. Exactly. It would just be like if there's a bunch of sellers coming in here at, let's say, $8 on AMC, you have to work through all of those sellers, right? Just like any support, just like any resistance. These trend lines in here are sellers, right? We have to work through the sellers, which is why we talk so much about support and resistance, right? You know, you think it's like Mobsky said, he got the Amazon over here, right? The idea of support over here, there's an absolute boatload of support down in here. I don't even have the line drawn on this one. We just had over here. Look at all of the, let me just put it so you can follow my cursor. Look at all the wicks in here, right? There's significant price convergence. It's a ton, right? All the time. You got to break through all those, right? And there's a reason why this has just been trading back and forth in the same spot, because there's so many buyers and sellers on both sides, right? That are holding it within place. That's why I kept talking about over here that if it's gonna make a move, this is gonna make a move, right? As soon as you break through that, you no longer have that supply above you. So the same thing happens on option charts, which is why a lot of the times you don't want to be doing what everyone else is doing all the time. You want to go with volume, but you don't always want to be going into the fucking supply city and you're stuck in a whole level of supply that nothing's moving. You just kind of feel silly. You're just sitting there. Sometimes you're losing. There's so many people selling at a point on the options, even though the underlying is going up and you're not even gaining anything, and you feel silly. You're like, what am I even doing here? It's usually a byproduct of you're first of all just buying the wrong contract. You're too out of the money or something, and there's just not even any value in it, right? No intrinsic value, never going to have a chance. Like those $10, right? $10 marches are just stupid. I did not do a trade because there's so many mixed signals. So Cosa Nostra needs a trade for tomorrow. So those of you that were hoping to get a trade, we had the F idea, and then people started posting the X idea, and we didn't even get a specific. So fund's not doing the greatest, guys. I'm hoping all of our personal accounts are doing better than the poor Unrefusables Cosa Nostra account, because Jesus, we are uncoordinated in our mind. And I was going to make a point. Those of you that are wondering what it's like to be a trader at an institution, this is why you don't trade with a buddy and you don't trade with other people. You just make your own fucking trades, because it's almost impossible to try to figure out and coordinate together what the hell you're supposed to do. So we're getting a good example of that coordination, and you don't even, who cares, right? But it's funny. Okay, for tomorrow, right? What's going to happen tomorrow? Who cares what's going to happen tomorrow? What's going to happen through the end of the week, right? Where are we going to be going in the end of the week, into next week, right? No one should. You can make day trades. That's fine, but you're doing something else. You're on your own. Day trades, you're on your own, guys. Right? You know better. Day trades, you're on your own. You made a day trade today. Well, that's awesome. Like if you took advantage of levels, that's great. In terms of swing trades, well, we need to be thinking about people are only going to be buying if price is going to be up higher later, right? I would imagine that anyone buying in here isn't just buying to fucking be a dick and to sell it tomorrow, right? Is everyone day trading here today, or are these people actually buying for more reasons? How many billions of dollars today? Probably $1 trillion, maybe $1 trillion of flows today. Did that $1 trillion of active trading just do it to be a fucking dick and to sell tomorrow? Like, is that actually what happened today? Probably not, right? We usually talk about no. Sometimes it does continue a trend, right? This could keep going down, sure. But for the level of buying in here, you would have to imagine that there's some confidence in here that price is going to be up a little higher later, right? For long positions. What about like travel? These charts, do you think that these are there's just all this buying because someone's just trying to trick you? They're literally just trying to trick you and get you to buy here. No, there is a point, and we're coming up to a level, and you don't want to transition, of course, because you're going to have a consolidation at some point, and we don't know that. So the best we can do is use probability with levels to time it, right? But you'd have to, when you're looking at this, think that, okay, we're in the channel again. We recovered some of this price. Volatility's dropped. The dollar's still moving down. Treasuries were getting sort of sold into equities, selling to go enter equities, which tells us there's a lot of cash sitting somewhere. Hong Kong, the Hang Seng, was looking pretty damn good yesterday. We had some take profit coming into our session, but in terms of this flag, it does look like sort of a flag mentality. Now, this could just break down tomorrow. Sure, but what's the probability? The probability is that this is likely consolidating this move and going to continue it, just like over here, continue it. So when you look at the other markets, Europe was pretty decent today. It was mixed, but it was pretty decent. So again, you start to look through some of these numbers. You look at the other commodities, crude being up again today, continues through the weeks here. The only thing you can really start to bring in is that Bitcoin is taking some points off. Again, this is sort of tied into all of those people selling in terms of retail, right? Retail selling. But there isn't really an indication that there's going to be a downtrend for a consistent amount of time, other than what we felt through this consolidation already. But it's not into a level that we can't control, so it would be slower, which means if it's a slow trend down here, right, that allows us to still take advantage on our trades. The only way that we use this average here to justify not taking our own trades in terms of trying to track velocity is if it's a move that is dictating the pace of everything else, which right now it's not. This is just a compilation of everything, and right now we know to avoid those trades that are moving towards the downside, if not just shorting them anyway, right? And so in terms of this affecting us, it doesn't, and you'd have to imagine that there is a belief that, okay, this was our consolidation. We had a relative reversal, right? We bounced on the halfway point. We did get down to the 3.5% of the 7% move. That seems like that's where it is. And look at the recovery here today. I mean, you just look at the move. I'm blown away by the candle. I'm really blown away by the candle. That's a significant. You got to put this back into perspective, right? How much was actually sold here intraday comparatively to just the fact that it was pre-market? Was there more buying or selling here today, like during the actual trading day? There was like twice as much buying as selling today. Literally, there was twice as much buying on the intraday than there was selling. And you have to look at it like that, because when you think about what's actually going on here, you had a sell from a continuation in pre-market. On the actual trading day, there was more buying than selling. There was more buying than selling, even on the tech side, which was the seller. There was more buying than selling. So if there's more buying than selling on a day, and you finished up on the day, not across all indices, right? I think when you look at small caps are a better example of this, that you did get selling here to start with a continuation from pre-market, which, why? Because this was leading, right? The small caps were much further ahead, so they had more to shed. But when you still think about the level of buying in here, you'd have to take that into rationale into your thought process and decision making, because someone else is making that decision. If traders as a whole are buying more than they're selling on a day like today, then can you say that today was sort of like when we started the day, that everyone was feeling like, oh, doom and gloom? Or is it that people are actually taking advantage, and they're actually not just like Twitter, it's trending on Twitter, buy the dip. We know it's not just them. No, it's sort of everyone is feeling the same way, that, oh, we're going to buy more than we sell today. And we did. There was an inflow. There was an inflow intraday. From market open to close, there was an inflow into the entire market. Was there an inflow or outflow yesterday? There was an outflow. There was an outflow yesterday, but there was an inflow today. Look at the difference. Think about the difference in here. Think about consolidations. We were consolidating the whole time. Now, I did talk a little bit about patience. Absolutely, you need to be patient on the market. That patience does not carry over to a lot of our positions because they're on their own trajectory. We understand them a little bit better than this. It's a little bit more money involved and more going on here. So in terms of understanding this move, we of course need more data, and the more data we get, the more clarity we will have, right? But based on what we see here, we need to just go with what we see, not what we think, not by piecing headlines together, creating a story, right? That's not what we do here. We just want to figure out what everyone else is thinking, put it together as data, and react with it, which I think if you kept things simple today, followed rules, you'd be very well set up going into the end of the week. You probably have quite a bit of unrealized profit if you're on the travel side, if you did not realize a significant amount yesterday, which I didn't see in the profit section yesterday. But I'm guessing that some of you finally took what maybe you considered bait before by taking those trades. I'm guessing that now you finally, sucked it up and made some of these trades, because again, every trade you don't enter is a trade you're not going to profit on, right? Yeah, it might be a loss. Yes. Any important takeaways from the Fed meeting? Didn't hear anything, but want to double check. No, so you could tell that besides from his statement, from the start of his statement, right? It was the same spiel he's been giving. Then we'll continue supporting the economy. We're not going to stop the $120 billion until we see sufficient. He brings up the unemployment numbers. We're still 10% lower than we were before the pandemic. Yada yada. So that was all the same in terms of inflation. He confirmed the same ideas of inflation before. All of these ideas are certainly. All of these ideas are certainly the same of what he said before. I think during the Q&A, the only thing would be some of the tone that he used felt like they talked a lot about the market and like, what do you think the market's reacting to? And I think a lot of it is he's just like, a lot of it feels, the answers are that the market's just reacting in sort of how I talk about violently reacting to different things, right? The market is just trending, but it's reacting to everything in a much larger way than it really is. Because if the Fed is just being consistent, it's because we're trending. And we know that the whole market is built on, it's just appreciated because of the amount of liquidity coming in, just the flows, right? And so it felt like every single time he answered about the market, he was just like, guys, we're just trending in the market. We keep putting the same amount of money in. It's like, why do I need to? He keeps reassuring in the exact same way, because why? Because they're going to keep just putting in the $120 billion a month, which means all of this is just noise, right? It's just noise in terms of the actual appreciation. And he had a trendy answer, right? To just continue to answer the question the same way he did 6 months ago. Put it in an equity perspective. His answer is the same way as this idea of this just continuing to trend, right? Times of uncertainty, and then Powell just reassuring, the market's reassured. It's all the same, right? And so when I hear his answers, the only thing I take away is that, oh, we're just going to continue trending, right? Until they actually stop QE in the 120 billion a month, nothing changes. Why? Because the supply and demand stays the fucking same. It's 120 billion a month. There's only a certain level of supply. So it's just going to be a continuous level of trend. The only time the supply changes is during a consolidation, that there's some sort of event relation, related with it, when we talk about sort of primary election, right? Primary election causing to come out of this consolidation. Everything is going to continue to trend. Powell continues to say it as well. They have no fear in terms of the market. Before, over here, when we were getting FOMC meetings, they were talking about market fear and that the market was running too hot. But this was because a lot of people were not prepared for the fact that the 120 billion would make the market look like this. All this is 120 billion a month going into the market. That's all this is. That's all this is, right? And so then over here, it was like, well, fuck, man. Like, are we really doing this? And then what happened over here? Over 2% inflation idea. Are we ever gonna get that over 2%? Probably fucking not. No, it's not gonna happen. Reinflation is happening, but we're not gonna get the full thing. But this is, again, that reinsurance to say, no, you guys are gonna get your flows. That's all it takes, right? It's all flows. It's, in terms of trading, it's not that simple. You can't just buy and then push it all the way to here, right? It's not that simple. So our trading is still, we need to go based on levels and week to week and swing, right? But it doesn't, in the terms of the macro, it's going to continue to appreciate on a trend. You'll get consolidations that are violent due to the options market and the way that positions get taken off and rotations happen, right? Big rotation days happen, but the trend will not change. Velocity is not going to change because the Fed with 120 billion, that's demand that's not going to change. The only thing that changes that are the people, the way the people react to certain events, and those institutions that are getting that 120 billion, how they use it. Those institutions are not going to say, you know what, fuck them. We're going to keep the money for ourselves. You can't do that. It doesn't work like that, right? They're going to keep putting it in because they're the ones that they're getting liquidity provided to them. Their positions are being bought. So that automatically goes back into the market. That's why we see it over here, right? So everything you said, I think when you think about what's going to change in terms of rates and how, I posted the dot plot. The dot plot's not going to change because of the equity market. And the dot plot is not going to change until unemployment goes back to what it was before. And guess what? There's still 10 million people unemployed comparatively to where we started before the pandemic, right? We still have 10 million jobs that were lost from pre-pandemic. Until those 10 million jobs come back, they ain't changing the rates. And they're not going to stop. Powell has made it clear that he's not going to stop the way he speaks about things. Your favorite verbiage word, guys, right? He's not going to stop. This here, it didn't even fucking react, right? It didn't even react. And I think it's so important to understand what's happening over here and how, I guess it's hard to understand how banks trade generally, but go look at these charts and see how these charts react to events. These things are worse than like your 5-year-old cousin to any fucking event. It's insane. Come look over here, guys. If you can trend here, right? You can trend here and you're not reacting to anything. Nothing. You guys are reacting to all kinds of shit every day, right? Which is fine. If this can trend, then you need to take it down a couple notches, right? Because banks are the fucking 5-year-old cousin that doesn't shut the fuck up at Thanksgiving dinner and is bitching the whole time, right? Literally, it reacts to everything. Banks react to everything. And it takes forever for them to get moving. They lose so much time. Yeah, girlfriends, whatever it is. But, Matt, you've never had a girlfriend, so it's not a good example. But, I'm just kidding. But again, you gotta remain on these trend ideas, and that's all this is, right? This is it's 120 billion a month. That's what it is. This is a chart I'm interested in tomorrow. Sun power, solar. Oh, pot stocks. So again, for tomorrow, what are we looking to get in? Solar looks really interesting. I think. I think pot stocks looking interesting from a retail perspective, right? Retail perspective. What does retail want to do tomorrow? And FYI, since I do have to do it, yes, I entered solar and pot stocks a bit today. Not real positions, but a little bit. A little bit. These are positions that, what are retail going to do? Oh, God. You know what? Everything looks okay. Well, it's a green day. I better start buying, right? Just like we've gotten a little better here. But they react just based on the color, right? Just based on the color, they start to react. What did I talk about? If this, I mean, it's kind of scary to think about the level of velocity that comes out of these moves. It doesn't take many of them. It just takes a couple subreddits and, you know, look at DraftKings today. Look at DraftKings today. Think about this move here. Think about this move here. Okay. It doesn't take very much here. It really doesn't take very much. This is a very small amount of. We've made. Does anyone remember? Okay. Before we get out of here. Those of you that are getting out of here, obviously have a great night. I'll see you in the morning. But does anyone remember the trade that looks like this? It was probably your first. It was one of your first big DraftKings trades. One of our first big winners as a group. Does anyone remember a trade like this? See, this is where I know that you guys are not looking at charts as much, and why I'll still continue to paint a big target on you guys, because I commit these to memory, not to gloat. But what I'm trying to say, does anyone remember this trade? If we go back, I'm going to go back and show you. You don't remember the chart? No one remembers the chart? Some of you are fucking looking, you cheaters. Okay. Okay, commit this to memory right here. All right? Let me take you back on a journey, okay? Let me take you back on a journey. Shit, I need to do it on a daily. Take too long. Hold on. Okay. Can anyone find it? I'm actually not going to tell you. That's your fucking homework assignment. I'm not going to tell you. There's a trade that looks exactly like we just had today. Just exactly like we had today. Where that shitter came all the way down. It was 8%. It came down 8%. And we bought it, and it was immediate. It was a big trade, right? There is an old chart for it. But I just want to remind you, so we'll keep it ominous, because I think it's a little bit more interesting. It might help people that don't know how to search for charts yet. You can go look in the Google sheet if you don't know and look for it. But what we had was, I posted the chart, and then DraftKings opened just like this the day after. And it was the greatest buy opportunity ever for this chart, because we were ready for the breakout, but instead it gapped down at open, 8%. This was almost 12% down here. I mean, it doesn't get any better than that. It doesn't get any better than that. July 14th. Let's see. Is that the one? I don't think so. Where's the context I'm missing? No, it's buying on support, Ecto. It's buying on support. It already rejected. It already sort of rejected some of these ideas, but it doesn't change the buying on support idea in here. I mean, sure, sometimes you're going to break fucking rules. Absolutely. And like I've said, you got to get a little creative sometimes. Absolutely. Yeah, I think it was over here, guys. It was over here, I think. I don't have the chart, but I'll post it a little bit later just to show you, because I actually don't remember, so I'm acting like I remember, but I don't remember the exact date. But the candle does look exactly the fucking same. This is the point. The exact same thing happened. We lost 8% at open. I bought, and everyone going, whoa, man, what do you mean you're going to go buy it down there? And actually, what Ecto just said is exactly what happened in the chat. Because I was like, I'm going to go buy it on support. And they're like, well, aren't you breaking the rule? Because it's below the chart. What do you mean? And it's like, you posted the chart and said it's going to go up 15%. And then it gapped down at open. And then everyone acted like they somehow lost money. It's like, it's the day after I post the damn chart, guys. Chill. Buy on support. Filled the gap. There you go. It did fill the gap. Good job. But anyway, think about this trade and what that's going to do tomorrow is what the point is. What do you think that's going to happen tomorrow? Yeah, it's still underneath resistance a little bit. But what do you think is going to happen there? Right? Penn, what do you think is going to happen here? If retail gets a little bit of a bite, just a little taste. All right? Do you care what happens day to day on this chart? You don't really care what happens day to day. It's just trending, right? And again, that's where you will wait and you're patient and take the trade when it comes to you. Wait for it to come to you. Wait for it to come to the trade. Roku, what are you going to do here? We're going to wait for it to come to us. Show us clarity, and guess what? We'll take this trade again. We will take this trade again. I don't think we have any other things to mention. I mean, there's so many things to learn from today still. Again, REITs, it's hard for me to show the REITs charts because I think it's like out of context for some of you to look at some of the REIT charts that I show. But a lot of the value charts are very similar when you look at them. But these REITs moves that have been making the move over the last couple of days and the last 2 weeks or so when I started really posting them for the breakouts. Again, this is just watching charts. These moves on options are significant. Every 1% and every 1% thereafter is a significant exponential where even if it's a few percent just on the day, you're getting close to 100% on your options trades, which again, these charts is so simple to see because they're yes or no's based on resistance every single time. So if you look through some of these charts, you're going to see them, right? You're going to see them. And it feels like very obvious in hindsight, but it's also very obvious in the moment. You just have to be looking at it. I know it's hard to look at everything, and you've got favorite charts you want to trade, but again, I mean, it's really easy to see the difference between some of the other price movement and when it's actually occurring. Do you need to get a part of all of them? No, you can just get a part of one of them. That's the point. What about Marriott here? We talked about it over here. What about Marriott? Did you get a part of this? You know it's converging with the rest of travel, right? These different ideas. Again, some of these, you don't have to get it every time, but you got to get a part of something. You got to get a part of something, or if you're still just fucking learning, then just learn. It's okay. I'm just pointing out trades. It just it does sting if you missed some of these more straightforward trades that we looked at, right? And you saw and you said, oh, you know what? Okay, I could probably get a part of that. And then something happened where you just didn't take the trade, right? It gets mentioned and then you're like, you know what? I'm cool with that. That's all right. I missed that one. Get the next one. Save. You know what? This fucking guy has said save every single day for the last 2 months. I'm sick of it. I'm not saving anything. I'm going to save my money and get out of this goddamn Discord is what I'm going to do. I am tired. I'm sick and tired of watching this guy look at fucking charts and draw lines. What is he trying to prove? It's all fundamental, man. Save is doing absolutely amazing things by giving 85% discounts. I posted in the bullshit channel, 85% discount. I could go, it's already like $20 to fly from here to Vegas. What do I need an 85% discount for? It's fucking $25 to fly to Vegas. $25. What do I need an 85% discount for? What is that even going to do? I don't even get it. Is there anything fundamental here? Probably not. But I'll tell you what, we are certainly taking off vertically. Cheaper to fly equals cheaper to buy. Okay. All right. You got it. What about Macy's, guys? If this goes to 20 tomorrow, you're going to be mad? You're going to just chalk it up to, it's all right, not a big deal. If you're in that dumb trade tomorrow and, all right, I believe in this company. I believe in this one. It hasn't even been a company yet, but I believe in this one. That's why I only trade the things I believe in. I trade in what I believe. Could you imagine being a trader that says, I only trade what I believe in? I don't really know what it is, and it doesn't even exist yet. But you know what? I'm a fucking believer, baby. I'm going to trade just that. That's just insane. You're literally insane. you have to be absolutely out of your goddamn mind to rationalize anything in that way. Do you do that with anything? Do you do that with like products that you use? I'm only going to wear, you know what? I'm only wearing Hanes from now on because I believe in Hanes. Not just because it's cheap and cost me only $2 for a t-shirt and $1 for a pack of underwear. I believe in Hanes, and I'm going to tell everyone about it. And you know what? I'm going to go on Twitter tonight and tell everyone that I love Walmart. I love Walmart. And I'll tell you what, I'm not going to shop at any other store. And even if, listen, guys, listen to me. This is an important point, okay? You've got a Walmart, and then you've got a Costco in your hometown, right? Those of you that live in the middle of nowhere. It still kind of frightens me to think about. But you've got a Walmart, right? And listen, you only shop at Walmart, though. And you're going to pay $20 for a box of something, right? But Costco, just a minute down the street, is selling it for $10. But you say, you know what? Fuck saving $10 right now. I am going to go to Walmart because I love Walmart. And I'm going to pay $20 instead of $10. Because I don't care. Because I love Walmart. That's what you're doing when you're over here and saying, you know what? I don't care that I could make money somewhere else. I love this company, and I'm going to die with this company, and I'm going to tell everyone on social media about it. I'm going to call my mom and tell her, Mom, I lost over 100% today. I don't know how it's possible, but guess what? You can lose more than 100% because my broker, Robinhood, said so, and they won't even let me sell it. And that's okay because I don't want to sell. And I'm going to complain about that, though, even though I'm a buyer. It's amazing how many of the people that say they're not going to sell a position complain about Robinhood not letting them sell. But, those cannot be related. They must be trying to sell the winning trade and hold this one. But, I really don't know. I wouldn't really know about that. Anyway, before I hurt anyone's feelings, if you trade with Robinhood, that's okay. I call you greasy finger monkeys or whatever I call you, but you greasy fingers swiping your screen. It's fucking frightening. It makes my skin crawl thinking about you guys on your phones. I got a big phone. I have a big phone, but I can't even imagine me trying to figure out how the hell do you do that, guys? I tried to mobile trade once. I've done it a couple times when I had to, but oof. Do you call, I'd rather just call my broker. Call the client. What do you want? You want triple Bs? Triple Bs A13s, okay? Mike? Hey, Mike? Hey, Mike. I need you, you. I need you to sell the A13s, the triple Bs, 20 bips, That's what the conversation goes from the buyer to the sell side. You got your seller, you've got the sell desk on the other side of you, and you go, hey, Greg, get your head out of the macaroni bowl. Yep. I need you to call the client and tell them 20 bips. Okay, you got it? Okay, good. And then you know what the sell desk does? The sell desk goes, hey, Logan, I got a good trade idea. I think there's something we can buy. I think I can get this client to buy something. You're like, listen, Greg. I'm the buy side. I'll tell you what we're buying, okay? Thank you. You don't need to DM me on Twitter or Facebook. Don't DM me on Insta. It doesn't go down in the DM, Greg. Get your head out of the macaroni bowl. You're blowing bubbles. That's how it goes. That's what Twitter and all those mobile traders remind me of, is the sell side guys. The sell side guys trying to come up with ideas. They're like, dude, it's your first day. Chill. I drop things on your desk, okay? Stop kidding around over there. All right, guys. That's all I got. I got nothing else. I am excited about retail stores again tomorrow. Again, all value. I'm excited to continue to see. And when I say excited, I don't mean I'm happy that it's green or sad that it's red. I just mean I'm excited to see the way in which some of these prices are forming. It's obviously, in terms of technicals, really what you look for and to get confirmation of when you have these ideas and they start to prove themselves and pay themselves. It's really important to build on that. And then when you're wrong, to see some of those charts that you're wrong on, and to I would say understand that there was something wrong with the way that you were looking at it. And because again, when you do a chart like that, like for instance, we're just looking at this ET chart, and this is my last point. When you create this idea, right, what you're really doing here through trend lines and levels is you are basically creating a model around the other way people think and the way people trade based on where price is. You're just creating a model of those other traders in the market itself. And so when you're right, then you understand how everyone else is trading. And so you can trade accordingly. This is like you're playing any game and you know what they're going to do before they do it. You can react accordingly by making a move before they do, right? But there's times, again, when you model it and then it's actually not the case. It's just not the case. And so then you need to go back and say, okay, what can I learn from that? And that's what I look for. I look for that confirmation, whether it's right or wrong, and so then I can learn and change it. How many times have I posted a chart and then I chart it the opposite way, or I chart something else, right? And there's nothing wrong with that. So plenty of you're going to change every single day. You're going to learn something every single day. You're going to have a level, and it's not going to be a true level, and you're going to be able to then change it, right? And you'll get to a point where you really start to get it, and you'll be able to get the timing, you'll understanding, all of these things will start to build. But again, it's going to take time. You're not going to be a boy wonder from the start, right? Just not going to happen. I think 10,000 hours is the good mark to use. So I'll see you guys. Have a great night. Have a great morning, evening, wherever you are. I'll see you in the morning. Watch out for charts tonight. There's going to be some fun charts tonight. I've got some fun ideas. I had some fun at lunch doing some lines. Listen, guys. You guys are sick. I didn't mean those lines. I was not at lunch doing lines. I meant I was drawing lines on the screen. Not like my phone screen, on the computer, right here, you're looking at it. I drew some trend lines, okay? Watch out for those tonight, and I'll see you in the morning. Enjoy.